Do you dream of living a life of financial freedom? Imagine watching your wealth grow, not just inch by inch, but exponentially. Yet one wrong move could turn that dream into a nightmare. Most beginners fall into the same traps when entering the crypto and Indian stock markets. And if you aren't careful, you'll be next. But don't worry. Today, I'm going to reveal 15 deadly mistakes you must avoid in your first year of trading to ensure your success. Everyone's talking about that one crypto that just can't lose. But do you know what's even more dangerous? The rush of jumping into a trend because everyone else is doing it. Remember, by the time you hear about it, it's often too late. If you're always chasing the next big thing, you'll lose before you even start. Think. How many of those overnight success stories come from people who got lucky versus those who did their homework? Ever notice how everyone at the party is talking about that one coin right before it crashes? Hype can make anything seem like gold. But do you know what beats hype? Facts, data. Before you invest, ask yourself, do you really understand what you're buying? Don't rely on YouTube gurus alone. Yes, even me. Take time to research a coin or stock's fundamentals. It's your money after all. Imagine studying for weeks, acing a test, then handing your grade to the class clown because he said, "Trust me, I got this." Would you do that? Margin is seductive, but dangerous. It feels like easy money, until the market turns against you. Imagine waking up one morning to a margin call, wiping out your entire portfolio. Scary, right? Over-leveraging has taken down even seasoned investors. So in your first year, stick to the basics. Why bet everything on one coin or stock when the market is full of opportunities? Not diversifying is like playing Russian roulette with your portfolio. A single wrong bet can send your hard-earned money down the drain. You bought that coin or stock and it's going up. But do you have a plan when it peaks? Too many beginners hold on for too long, waiting for that extra gain. And before they know it, they've lost it all. Greed kills portfolios faster than anything else. Know when to get in. And more importantly, when to get out. Ever notice how the loudest people on Twitter or Reddit seem to have the best advice, but somehow they never mention their losses? Social media is full of noise. Sure, it's fun to scroll through, but don't base your financial future on memes. You're not in this for the LOLs, you're in this to build wealth. How about we let the experts handle the memes and the professionals handle the trades? Let's face it, watching a stock rise can make your heart race. Watching it drop can make your stomach sink. But making decisions based on emotions is a fast track to disaster. Successful investors stay calm and strategic. They see opportunities in every dip and caution in every spike. Every trade has risk. The question is, are you managing it? Set stop-loss orders. Don't risk more than you can afford to lose. And please, never go all in on anything. Crypto and stocks aren't as freewheeling as you might think. Taxes are real, and the IRS won't forget about that crypto gain you made. Plus, regulations around crypto are changing rapidly. Make sure you understand the rules before you find yourself on the wrong side of them. Many start trading without a plan, thinking they'll just figure it out along the way. That's like going into battle without a shield. You need a trading strategy that fits your goals. Are you long-term or short-term? Day trader or investor? Set your goals and stick to them. Timing the market perfectly is a myth. Even the best traders get it wrong. If you're constantly jumping in and out, you'll likely miss the big gains. Think long-term instead of trying to outsmart the system. If Warren Buffett doesn't try to time the market, why are you? Cryptos and stocks aren't get-rich-quick schemes. Building wealth takes time, patience, and strategy. If you're looking for instant gains, you're setting yourself up for a hard fall. Every year, people lose millions to too good to be true schemes. From shady ICOs to pump and dump scams. Always remember, if it sounds too good to be true, it probably is. Stay vigilant. More trades don't mean more money. In fact, overtrading usually leads to burnout and poor decisions. Sometimes the best move is to sit tight, and let the market come to you. Mistakes are inevitable, but what separates successful traders from those who fail is their ability to learn and adapt. Reflect on your losses, refine your strategy, and never stop improving. The market is your best teacher. You now know the 15 critical mistakes to avoid in your first year of trading. But knowing isn't enough. What will you do with this knowledge? The decisions you make in this market will determine your future wealth. Avoid these mistakes, stay disciplined, and build your financial empire brick by brick. If you're ready to dive deeper and truly master the art of trading, check out this next video, point to end screen, where I uncover the best strategies to dominate in the crypto and stock markets. Subscribe so you don't miss a step on your path to financial freedom.